Dr. Doom is joining us. Marc Faber is famous for his contrarian approach to investing, and he's editor and publisher, as you know, of the Gloom, Boom, and Doom report. Marc, good to see you again. I know you're in Zurich. You're closer to the action than we are. What is your sense about what's going to happen over the next 2.5, 3 hours?
Well, I don't know what other people think, but what I think will happen eventually, and there are so many contradictory statements coming out that nobody really knows, but eventually the same will happen as in the United States. The ECB will print money one way or the other. And the debts that essentially should be written down to a realistic value will continue to be carried on the books of banks at unrealistic values. So the end crisis will be postponed until the sovereigns go bankrupt.
Marc, it's David Faber. Will go bankrupt. Well, when will that time be?
David.
Hi, Marc. When you say they will go bankrupt, that is a very strong statement. I'm curious if you could put a little bit more behind why exactly you believe that will be the case.
Well, before they go bankrupt, they'll print money, and they can print endless money. And as long as we have Ben Bernanke and Janet Yellen at the Fed, they will also print money. And so they can postpone the end game endlessly. Endlessly not, but say for another 5 to 10 years. But each money printing exercise brings about unintended consequences. And these unintended consequences are partly higher inflation rates than would have been had no money been printed. I just read today that educational costs this year will rise by 8%. And as you know, the typical household cannot afford anymore a good education. So the students have to get students' loan, and now the students' loan almost exceed consumer credit outstanding. So you essentially create more borrowings on top of an over-leveraged society, and eventually the hour of truth will happen.
Mr. Faber, I wish I'd caught you kicking off.
But that doesn't mean that stocks...
The world. Sorry, we've got a really bad delay here. I wish I'd caught you kicking off the World Commodities Week on a Tuesday in London, where I understand from the Journal this morning that your lecture covered World War III, drug abuse, and the failure of the welfare state. And according to this blog, you actually concluded it by suggesting that people should not just diversify their assets, but diversify exactly where they hold those assets, because you believe they will be seized by politicians as welfare states enter their death throes. And I believe from this quote, you concluded by saying that the governments, they're going to blank you, that's for sure. That's quite a negative view, don't you think?
I said it differently, but exactly what I mean. I think the governments today are no longer representing the interest of the communities, but they are defending their personal interests. And essentially you can buy votes by voting for people who hand out money, such as Mr. Obama. I think he has a good chance to be re-elected by simply distributing money. 48% of Americans today, they get some kind of government subsidy. And the problem is, in Italy, in Greece, in Spain, everywhere, is entitlements should be cut now and not in 2026. That will be far too late. But nobody wants to accept the reality.
In Steve Jobs' new autobiography, Walter Isaacson talks about a conversation that he had with Rupert Murdoch. And Steve Jobs says that for commentary and analysis, the axis today is not liberal versus conservative. The axis now is constructive versus destructive. Which side of that line do you think you fall on?
Well, I think I'm very constructive, and I'm a great optimist in life. Otherwise, I would commit suicide in view of the kind of governments we have nowadays. Because for sure, they will take wealth away from the well-to-do people one way or the other. And from the middle class, they will take it away through inflating the economy and lowering the standards of living. The typical household in Western Europe, in the US, has lower standards of living today than, say, 20, 30 years ago. There's no question about this. And so I think that we are in a very difficult situation, and that deleveraging must occur, but the governments don't want to recognize that, and so the fiscal deficits are out of hand. But it doesn't mean that stocks will go down. When you print money, everything goes up. At different times, different asset classes. And I think that stocks may still continue to go up, and I'd rather own equities than government bonds for the next 10 years.
So you're talking about what we sometimes here call the Tepper corollary, meaning as stimulus floods this country, floods the world, asset prices increases. Do you have a fresh target for us on the S&P, even despite the reasons for the rise or the potential rise?
Well, I think the super bulls and the super bears will be disappointed that we may be in a trading range between 900 on the S&P and say 1350, something like this. I don't think we'll make a new high above the May 2nd high on the S&P, which was 1370. But I'd like to make the following observation.
Yes.
If you print money in the US, it doesn't mean that it creates bubbles in the US. It can create bubbles in your neighboring region, say Latin America or Asia, or it can create bubbles in precious metals or in commodities or in home prices somewhere else in the world, or say, for instance, in China. And if the Chinese bubble bursts one day, which inevitably will happen, maybe not tomorrow, but maybe in 3 months, maybe in 3 years. But when it happens, it will have devastating consequences for the global economy.
Some might argue a lot of those things have already happened or are happening. Mark, appreciate your time. Good to see you again. Safe travels in Europe. Marc Faber joining us.
It is my pleasure. It is my pleasure to be so optimistic.
Again.
Thanks, Mark.
Warming the cockles of our